Good evening, everyone. Welcome to the weekly market wrap up show. This is where I do analysis on QQQ, SPY, Nvidia, Tesla, Apple, Amazon, Google, and Microsoft. So I will be giving you guys support and resistance levels to potentially look into. And what's the most likely scenario going into next week? Is the market going to roll over, or are we going to bounce into our 52-week hike again and test that range again? So we have a couple of clues we get in the market currently, and let's get into it. So today's video is a bit late because I just got home from a hike, and yeah, hikes are always good. I also recommend them as well. They're pretty good for letting go of the emotions, the stress you get from trading, especially when you go to nature. All right, that aside, let's get into the data for next week. Data for next week, this Tuesday thing is not as important for me. Consumer confidence is though, so that's the only one I'll be looking at. Powell speaking again next week, and on Wednesday and Thursday. GDP is going to be a big one for sure. Jobs claims, we think it's always important, and core PC is also another one that will be pretty big as well. So a few big ones next week, and Jerome will be speaking. So we'll see how he continues telling us that it's 2 hikes, but market's not believing it. You can see this chart right here. Market does not believe we're having 2 hikes, so it's 1 hike and hold for the rest of the year, still priced in the market. So if he actually does 2 hikes, then market needs to reprice that in, which would probably fall. So, but we won't know that until September because the first hike is already priced in. So the second one we'll have to wait to see if he actually does it or not. AI sentiment data, 30-week, that's bullish. And even though this week we got a red week, and going into the third week, we got to be cautious due to it being 3 weeks of bullishness. And we are trading pretty high at the range. We just got out of extreme greed. So today, after today's red day, we're now just at greed. And we'll see. Give us more clue in the charts instead of this sentiment just for a big direction gauge. It doesn't. Sometimes we just want to know how far we're at. Let's say when we're sitting at 85, then we gotta be pretty cautious as a bull to be buying up there, versus when we're sitting down at like 17 or something, extreme fear, right? So when it's in between, this doesn't really give us any idea of what to do. But when it's in extremes, we gotta be cautious on each side. All right, let's take a look at QQQ. So QQQ today is also a red day, and we have traded within yesterday's range. That means it's an inside bar. So when we have inside bars, it just means the market is currently indecision. And you can see that we did also close in the middle of that candle too. So it's pretty indecision until market decides if we wanted to break that 12 EMA or not. This teal looking line is an indicator where you just type in exponential moving average. And then you type in, once you get this indicator right here, EMA 12, you just type 12, you can get this line. You can make it any color you want. So it is currently holding. You can see bounces off here, bounces off here, bounces off here, and we are still holding there for 2 days. So if bears want to see anything happening, we definitely need to break that before any of that happens. And it's just a trend line for the momentum. So if bears cannot even break that 12 EMA, which is pretty strong momentum. Sometimes we use the 20 or the 26, which is further out. But this is the very first 12 is super near the price level, meaning it's super strong momentum. So we'll see. Bears need to break that. Key for me next week is the inside bar break of either which top or lower of the inside bar. So today's bar, if we do break the low of today's bar, we're going to get a daily downtrend. And you can see here, we are actually forming an equilibrium. Let's see here. Yep, looks like an equilibrium to me. Slightly just forming. Equilibrium just means range is tightening up before market decides to make the next move. So we're just tightening into this range, and we'll break Monday. And so which way we break is going to determine our next move for sure. Because the market's tighten, it's getting for its next big move. Which way breaks, we don't know that yet. We won't know exactly which way it's going to break. We'll know on Monday when market opens. What even break? If we get a red futures day, where on Sunday night We go to a future chart. Let's say we just have a half, even like a 0.25% drop. We have a bear break here. Most important part for me is cash open. When market opens, I want to see volume coming in. If it's going to be a bear break, I want to see bear volume coming in. For a bull break, not as important for volume for indexes, in my opinion, especially in QQQ and SPY. Market is designed to go up in the long term. But if you want the market to drop for indexes, you need bear volume to come in, just like these bear volumes over here to come in. So QQQ, equilibrium key is for me. If we do break bull, we are looking back to this 365, 366 level, which is that hours head and shoulder resistance zone that I talked about yesterday. You can see this 4-hour head and shoulders that around this zone. So that shoulder level is the first resistance if we do break out of this equilibrium bullish. So that would be the 366 range. If we do break that, then we're looking at this zone right here. This 369 and 372 range. It's a little cluster of resistance. We have some historical price actions in this zone. The most intermediate zone, you can see right here, is this zone that we're testing from the March highs in 2022. Same thing in this area so far. So we zoom out into the weekly time frame because today's a weekly wrap-up show, so we got to take a look at the weekly. So I'm going to delete that for us to be able to see it. So we still don't have weekly consolidation, and I've been talking about this weekly consolidation for a while. We need a candle to close below the prior candle's low. So we didn't get that. We had to close below this low to have weekly consolidation. So let's say next week, just drop from here. So that's where the market closed. And the low of this candle is only roughly 0.7%. So if we just drop 0.8%, we have a weekly consolidation. Weekly consolidation doesn't mean that we're just going to roll over and drop to the next level or whatever. There's a weekly consolidation right here. Let's see. Let's see. Initial move up. No consolidation. This candle closed below the prior candle. Sorry, not closed, but went below the prior candles. That's a weekly consolidation. And then market decides to want to go higher. So right now, after this one move up with zero weekly consolidation, we want to see the market consolidate before making its next move, because this is quite extended. Even if you buy right here, right? Let's say the market bounces, and you're like, yes, I made the right choice. And then it drops, right? It happens quite often, especially when we have such an extended move. So what market want to see is, even if you're bull, you want to see weekly consolidation just like this. 1, 2, 3, 4 candles of 5 weeks, 6 weeks of sideways, and slight dip. So you want to see, like, a candle down here next week. We break below this week's candle. Now the weekly consolidation is on the way, and we have it chopping around here. Go a little lower, bounces off this golden pocket, 0.65 area where it was prior resistance. Now it's going to act as support. Boom. That's a good time to buy as a bull after it consolidates, because you want to catch the next move up. Obviously, if we have a weak consolidation and then go sideways, and then we get a bear break, then obviously we start shorting. So these kind of plays are the best ones where we have a consolidation and it breaks above that resistance on that consolidation. It goes sideways, just like right here. We just waited 5 weeks, and once it broke above right there, right at this zone, you buy. It's like a confirmed weekly bull flag. So it breaks out that area, and you start adding, and you can catch this move. Just like the last move down here too. Initial strong bounce, a big weekly bounce right here. 20% on QQQ. No weekly consolidation, straight move up. Right now it's the weekly consolidation, chopping sideways, and then it breaks above the prior candle resistance. Boom, you buy this next move up right there. What we want to see on the consolidation, right? We don't want to just buy as a bull after it's up 5 weekly candles, and assuming even if we get lucky, another one goes up, right? So trader, we always want to condition ourselves to make the best practices so we don't make those mistakes in the future and be disciplined. All right, so guys, for QQQ, let's take a look at SPY. So SPY very similar to QQQ, but it's a weaker chart. So I've been talking about this 4 hours head and shoulders on SPY and QQQ, and we have a confirmed bear break on. This is the left shoulder, this is the head, and this is the right shoulder, and we broke below the neckline, and now we have a bear break, and we close underneath. So it's a power uptrend into a downtrend. That's what a head and shoulders pattern is. So when that happens, now we have a confirmed 4-hour downtrend on SPY. Now we zoom out into the daily chart to see if it's a daily downtrend or not. And it's not, because from the top of this move to this bottom of this move is one straight move. There's no consolidation. You don't see any kind of closes above the prior one. So if you get one right here, kind of where it bounces, and there's one kind of there, and then we drop below the prior low, then that's a daily downtrend confirmed. So now we don't have that, but this size of this pullback is now big enough where the next bounce, bears would be looking for that lower high to be potentially for the next move down. So I'll be cautious in going into next week due to the size of this drop. But if the bulls bounce back above 50% of this drop, or say over here, then the next move drop, where it can potentially shape up that higher low. The size of this bounce is going to be key for us. If it's a very shallow bounce, let's say we bounce only to 0.382 over here, and we reject it from there, that's a daily bear flag confirming. If we do break this below, that's a daily bear flag confirming. So next week, you guys should be watching is how far SPY and QQQ is going to bounce. And if it's a shallow bounce, then there's potentially a chance for us to drop lower. Maybe we'll actually get one more leg down. Let's say we get another leg down like that Monday, and then we bounce. Or we just bounce from here. So we'll see how that, nobody knows exactly until we get the market open. But this size of this drop is already big enough that the next bounce, if it's a shallow one, bears will be looking for that entry. All right. Let me see. QQQ. Yep, same thing with QQQ. 3% drop. QQQ chart is still better than SPY, a lot better. But we'll see if it breaks down next week. We'll take a look at the big tech stocks, give us a better understanding who's showing some cracks and who's not showing any cracks. Because if those big tech stocks drop, QQQ is going to drop for sure. Nvidia, relatively weaker than QQQ today. It is down 1.9%, while QQQ is down roughly 1%. And this rising wedge, we drew this one on Monday or Tuesday. Can't remember. But essentially, this is just price goes higher. Nobody wants to buy. Too expensive. Everybody's FOMOing again. It's too expensive. Nobody wants to buy. Drops to here. Everybody wants to FOMO again. Nobody wants to buy. Essentially, the price just goes a little bit higher than prior one, but it just gets too expensive. Nobody wants to buy more at this levels. Essentially, it's a bear break here. Retest that zone. Rejection from that pattern. And now we came out of the lows. And we're talking about this key low over here, 420. Everybody's favorite support. 20, and we still haven't broken it yet. So we'll see if we actually break through it on Monday. We had a slight bounce here when we touched it. So it makes sense. But due to the size of how shallow this bounce is, I'm going to say we're probably going to break through this Monday, unless Monday it just happens to be a super green day on QQQ, and it just helps Nvidia bounce again. And if it's a shallow bounce, probably going to test this again. We'll see. Right now it's in this chop zone where it's 433 and 420. All right, take a look at Tesla. 4 hours. Head and shoulders confirming. Looks like a daily. Here, shoulder, head, left shoulder is forming. So right shoulder is forming. So we'll see if it actually confirms. 4-hour is actually looking like it's confirming. On the 4-hour, beautiful, actually, almost looks like a textbook head and shoulders, exactly. Right head, pretty much right there, and now we're just sitting at the neckline. So all these market charts are heading, forming a head and shoulders. It's a bearish pattern. Downtrend if we do break that low, right there. If we do break this low, let's see, how's the low of this candle? 248.26, right there. If we do break that, bear break into a 4-hour downtrend. So a confirmed head and shoulders break. And see if it would be a daily downtrend. Nope, it would just be one move if we do break that low on Monday. Don't have a daily downtrend yet. It would just be a one straight move down. If we do break that, so we held the 12 EMA. Bounced off only once, even though we haven't touched it for the past couple weeks. This is a very strong chart. Bulls want to see, even if we do break this and we bounce, bulls just want to see us sideways, consolidate sideways, give it a bit of rest before the next move up. That would be the most ideal for the bulls. Strongly moved, and we're able to consolidate at the highs. That'll be super favoring the bulls. Bears obviously want to break through, come back down to these gaps. We break that head and shoulders bearish pattern, and they want to fill these gaps as a bear. So we'll see. Very first step for the bears, break that head and shoulders and 12 EMA. The bulls, hold the range, you are solid. Okay, Apple, 0 red flags again. Absolutely been talking about this guy for the past months and never showed this guy because nobody wants to short the big stock in the market. Testing all-time highs. Went to all-time highs again today and came back to it. So it could be forming a temporary top here. If Apple starts to even just come back to 182, QQQ is going to drop probably 1% to 2% just from that little drop from Apple. So we got to be cautious going into next week because how much more is Apple going to run, right? You can say, oh, maybe another 2%, right, to 190, or like maybe, yeah, it's quite a bit to ask for, especially how big this stock is. So want to be cautious because of Apple being showing 0 red flags at the moment, and if it does start to just even consolidate, break that 2-day EMA 12 that I've been talking about as a full bull control guide, you go to the 2-day time frame, and then this Taylor King 12 EMA, and see how many pounds it bounces off exactly. 1, 2, 3, 4, 5, 6, 7, 8, 9, and we're not even there yet. We're not even close to it. That's how strong this chart is up there. So if we just consolidate on the weekly time frame, come down a little bit, let's say 20% is that. That's a 2.2% drop, and that's going to affect QQQ and other tech stocks. So we gotta be cautious because weekly consolidation is likely due for Apple as well. You can see one straight move, no consolidation yet at all. So consolidation is likely due for Apple as well. So that's one of the things we gotta be cautious about, even though it hasn't shown any red flags yet. Amazon bull break. Just testing its highs. So 130 is psychological resistance that I'll be looking at. If we can't get over that, we're probably going to come down here to 127 to retest the support zone and bounce off of that for bulls. All right, Google. Google, still the weakest of the weakest, but we came back into this. That's my Google phone. We came up back into this chop zone where it's still in the chop zone. So all we have to look at is the zone 125 to 126, and the support is 121.4. So this will be our chop zone guide, and we'll see if it gets back out of this or it continues to bounce back into the top of that zone to retest it. And Microsoft looks like I only have 25 seconds left. Microsoft is the weakest stock, and it's a shallow bounce, so bears are likely looking for that daily downtrend now. So I'll do another detailed breakdown on just the big tech stocks on Sunday, as always on every Sunday. So take a look at that, And if you do subscribe, you guys made it this far, and I will see you guys tomorrow for natural gas update.